Let's make clear that ETN, as opposed to ETFs, carry some credit risk as well. So talk about how much money Fisher Investment has invested in ETNs and put that into context for us. How big is it? How big is that relative to what's available?
Yeah, so if you look at Fisher's most recent government filing, we know that they have over $6 billion invested in these ETNs. Now, $6 billion is roughly 5% of their assets, from what we can tell. But that 5% doesn't really tell the full picture. If you look in the grand scheme of things, the U.S. ETN landscape is roughly $22 billion. So basically, Fisher accounts for over a quarter of the assets in U.S. listed ETNs, and they have 5 of the top 6 largest. They're a massive player in this space.
And perhaps the space is somewhat worried given the recent lewd remarks coming from Ken Fisher, the backlash, the aggressive sales culture, all of this seemingly pulling money from funds that he runs and perhaps affecting the entire industry. I'm interested in ETNs in particular and about what's special about them, how they're being used, because they're riskier than the rest of the market, right?
Yeah, so I mean, these particular ETNs are especially unique. They're basically structured notes that offer quarterly leverage, 2 times quarterly leverage. And usually when you hear of a leverage ETF or ETN, it's a daily resetting, and they're really good trading tools. These things aren't really good for trading tools. They're also not good for long-term holding, although they're better for long-term holding than those daily leverage. But how are they being used in client accounts? They're basically being used in 5 to 10% of a client account, and Fisher's using them to try and outperform a benchmark, right? It's adding a little juice to the portfolio to try and catch up to a benchmark or outperform it over a given time period.
Ooh, sounds dangerous there. Talk about the fees involved here, because of course people tend to go over and gravitate towards ETFs because or ETPs, exchange traded products, because they're lower cost. How much does Fisher pay, and how much is he making?
Well, theoretically, he's not making anything off of this, so it's the banks that are making the money. But these things this is the big deal here. These things are very expensive. When we're used to talking about ETFs, we're used to talk about 0.2%, 0.1% fees. These things are charging at least like 1.5%, sometimes up to 4% in annual fees. So what happens there is there's also complexity in it. Some of these fees float with LIBOR, so that's added complexity. But the good thing here is they're not advertised to traditional people. Fisher isn't out there, these banks aren't out there advertising them. The vast majority of the assets in these products are coming from Fisher, so there's professionals that are allocating to them. But it makes you wonder what percentage of their clients actually knows what they're investing in. If you're a client and you invested in Fisher and what you want him to do is outperform the market, you might be happy that he went out of his way to go out and create these products to give him a chance to try and outperform despite the risk. But if you hired him to give you a broad-based asset allocation, low-cost exposure, take care of your money, you might not be happy that he's putting his money in these high-cost, high-complex products.